behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith. And with us today is Barbara Doran. Like Doran, she is the CEO of BD8 Capital Partners. Barbara, thanks for coming back to Buy, Hold, Sell.
Delighted to be here. Thanks, Todd.
Absolutely. Well, we started the two-day Fed meeting today, as you know. Tomorrow is the big Fed rate decision. Stocks have just been on a tear with all the hopes of a Fed rate cut. But what happens once we get the Fed rate cut, Barbara? Will we still see stocks rallying?
Todd, I think it's a very timely question, but I think it really depends a lot on what Powell says and all the color commentary, because some people do feel that we don't really need to cut rates. I mean, yes, the labor market is slowing, but unemployment has crept up a little bit, but you're still seeing full employment. You just saw the retail number this morning. It was better than expected by almost 3 times. So people are still spending, even with higher prices feeding in through some of the tariffs. So people are, the economy looks good. It's down at a 1.5% growth. Maybe it'll be 1.5% next year, but there's really not big signs of trouble, just a slowing labor. You're not seeing big layoffs. So I think a lot depends on what Chair Powell says, because right now the market is discounting or expecting 3 rate cuts this year of about 25 bips each. I mean, Wednesday, looks like a sure thing. It's about 100% probability. And then October, probably 80% probability, then December. But we'll see. We've got a lot of CPI, PPI, payroll numbers to come in the meantime. So I think a lot depends on what Powell says.
Barbara, it was Wall Street Journal today was talking about something I've talked about for a long time, which is how crappy the surveys are and how the response that they get on surveys are. How do we make these earth-shattering decisions when the surveys are, from the marketing 101 world, that are not getting people to respond, number one. And so number two, we know there's going to be revisions, so you can't even take the first stab at it. To me, I was in DC a long time. That's a really big building down there. And that meeting room they have, I would love to be in there today. Because I think if I was on that board, I would be saying, hey, wait a minute. Whatever number we say it is, I'm taking it down 10% just because. Am I overdoing it?
Well, yes and no. I mean, obviously the Fed is not dependent on just one data set, and I think we're seeing, if you're looking, that's why they're looking at retail sales, or even you had the Empire State Manufacturing or all of that, but that's only one of many surveys, and you're piecing together, trying to see what are the leading indicators, what is it telling us? So it's really the conglomeration, like why are initial jobless claims? Okay, they had a pop up last week. There's some explanation that could be a bunch of one-offs. If it stays up this week and next week, we'll see. That could cause us to rethink things. But that's always the canary in the coal mine when you see that creeping up. So, I think the numbers have been what they've been. I think when you're looking specifically, I think you may be talking about the non-farm payroll.
Yeah.
Big revisions we had over the 3 or 4 months, not even the yearly thing. And there, when you read about the survey response, you're right. It seems that there's been a lot of slippage in terms of hitting the deadline. So you're getting the information, but you're getting it belatedly. So there seems there's, obviously some process issues there that could be tightened up a bit. But ultimately, when you're doing, first, second, third revision, by the third revision, I think those numbers are probably pretty much in line. And again, you got to take it in the broader context with everything else.
Yeah, I would also go with the AI revolution, if you will. I was just writing a newsletter to our subscribers and to our wealth management clients saying, okay, the last 2 years from 2022, we've been getting rich fast. And I'm saying now we're going to be getting rich slow. 60% of the gains in the market, what we're going to call the market out of the QQQs of the S&P 500, are AI related. How long is that going to last here, girlfriend?
Yeah, well, that is a good question, because when you look at since 2019, just before pre-COVID, when you look at the amount of wealth that's been created in the markets for the households in aggregate, the estimates are 40 to 50 trillion. That's huge.
Yeah.
And when you look at, again, the indebtedness is way down, we have jobs, so people can keep spending. And the AI thing is probably, at best, fourth inning. So when you keep seeing, you even saw today a Microsoft, announcement of an order, 30 billion. So the infrastructure is going to continue to build out. all the power and energy that we need. So I think that we've got a few more years at least of this. And plus all the applications, that's going to be the layer we don't even know yet.
Yeah,
All these
there's no question.
there
I
is.
use Genius like unbelievable. I mean, I
Mm,
did a report on optical networking. So in our world, we divided the whole AI world into basically 18 different ecosystems because it's not just seven anymore, right? I've learned how to prompt. Have you doing some prompting learning? I learned how to prompt better on Genius, and I
yeah.
get reports, Barbara, that I couldn't hire someone to do as well and as thorough and as well, notes and so on and so forth. What if you got out of college now and had $200,000 of debt and were promised to go to Goldman Sachs and be a junior research assistant?
Yeah, well, that's, it's a question because I use ChatGPT and I continue to find so many amazing uses,
Yeah.
putting in a letter from somebody and say, what's the right response and what does this really say? It's really extraordinary. And, and we may be a little bit more advanced. I mean, friends I talk to don't use it yet. And you're seeing this also in corporations, they're still really examining it. How do we use it? You're seeing this in the sovereigns, but in terms of jobs, I mean, we've had these questions all along, look back to the horse and buggy era when people came off the farm,
Todd
what are
knows
we going to
about
do?
that. You
Yeah,
and I
what are we going
don't,
to do?
but
It's going to
Todd.
displace, all
Yeah.
these things. And yes, it does displace, but somehow things evolve and there's other opportunities that develop along with it. So, we'll just have to see. But right now it looks like, the productivity increases. It's hard to measure, but it looks like it's already happening. But you're seeing all these surveys recently where people are saying, well, I haven't seen the ROI yet. Well, I think they will. I think it's a bit early to be looking.
You know what I found, Barbara, is
Yeah.
that the same people bitching and moaning about ROI were the same people who are bitching and moaning about the internet. The same people who are bitching about, other. It's the person was born on the wrong side of the bed, uh, and they don't see the future. They react to today, and I think they're just so left brained that they can't get the right brain to kick in and look forward. I would say again, 18 different ecosystems, and I think what we're seeing is okay. The Mag 7, blah blah blah, but go the second derivative, the third derivative, all the way down that road. There are. I mean, how about that Oracle number? Was that just
Just blew,
mind-boggling?
yeah, it blew everybody away because Oracle has done what IBM did. A lot of these the so-called stodgy companies, or Microsoft did. They've reinvented themselves, and it was hard to know because people were still, Nvidia sold off last year. Oh, it's
Yeah.
gonna be short-lived. How sustainable is this? Well, I think when an Oracle comes in and shows how real the cloud infrastructure demand, the data center demand is, and when you see the hyperscalers and everybody else committing, huge bucks, we're talking about probably, I've seen some estimates that we're going to need $1 trillion in financing over this next 3, 4, 5 years for all this build out. So it's not, and it's going to continue to evolve as they drive costs down, and who knows, it's going to expand the usage. It's really an extraordinary time. It's an
Yeah,
exciting time.
no question. Well, also interesting to me, the insurance companies that I work with, that we do money management for, et cetera, et cetera, they're pretty conservative people. And when private equity came in and said, we're going to do some debt refinancing or origination financing, that was in the Wall Street Journal, I think today or yesterday. And that was intriguing because now they're willing to take a little risk because they see that A, the yield is fantastic. And then B, Oracle went with this data center light, which I just love. We don't own the dirt. We don't own the building. There's no value added there. We own the AI data tech stack. Easy for me to say. And now sort of that CoreWeave and Lightbridge and some of the other people are starting to look pretty smart.
Yeah. Now,
Barbara, are you a buyer of Oracle at these prices?
well, it's a question because when they reported, I don't own Oracle. And of course, you're always like, oh, I wish I owned it. But
Yeah, dang.
And so, yeah, and I think it's one of those things, it is going to go much higher, but it's always like when a stock has run this much in such a short time, that's been a lot of momentum players, maybe flushing out some short sellers. So in the short run, it's going to get a little ahead of itself. So I think it's one of those things, and I've started to do some work on it because I think it probably does warrant a place in the portfolio. But at these levels, I mean, what I've found in investing in growth stocks, you always have to stick a toe in, right?
Yeah.
You may not get that again. And the fact is, they will continue to get their earnings higher and higher. So they will grow into their multiple. So it is but it's always the question, where do you start to buy? You probably stick a little toe in. I would wait a little bit, given the whole market is up in anticipation of this Fed cut. And I think the day or two is going to tell us a lot. And I think we could see a bit of a pullback, which would be normal given the big, we'd be new highs practically daily.
Yeah, I was going to ask you that sort of the same idea that when you get these big rushes up, and we have subscribers, right, who are do-it-yourself investors, and I have a Discord room where people ask me questions, and OMG, some of the questions I've gotten in the last 30 days. Um, so your point is, and I love your point, which is that you got to have a toe in, simply because that sort of gives you a sense of where it is, and hey, we might get another thing that will make you look like a genius. But if you don't have any in it and you just watch it go up and up, how do you deal with that?
Well, that's it. I mean, investors get paralyzed because they just go, I missed it. I missed it. And, unless you've been, doing it a long time, you realize you haven't missed it.
You haven't missed it.
No, you haven't missed it. I mean, you just look at, I had this argument. I was at a firm, gosh, I don't know, 7 years ago, and I was the growth investor and they were the value. And they would talk every stock I talk about, oh, the PE is so high.
He's so high.
And these are stocks, these are all the Amazons and all these names that we know have just tripled and quadrupled since. And it was hard to explain, look, yes, it looks expensive, but it's going to keep growing and growing and growing.
Yeah.
So it just,
I'm totally with you. I would say that the value being a growth investor versus being a value investor. I think they must be taking pills to be sedative or something, because the last 10 years they've lost, the last 15 years they've lost.
yes.
I don't know how you stay in business,
know-
trailing the growth world so much.
I know. And well, a couple thoughts there. And Tobin, I'd be curious what you think about small caps, because you've also seen that kind of lengthy outperformance, large caps versus small caps over the same amount of time, 10 plus years.
Yeah.
I think so much of the nature of the companies we see it are just, there's so many more growth technology, there's so much going on and so many more growth names. And value these days it's more like a mechanical thing. Okay, it's selling at a discount to its earnings, it's got a discount to its book value. It's not really about growth and where you're going to get this double digit, performance in the future. So that's why value is not been value as a category. You only see it, I think, in times of rotation. Like right now, people are looking, things are high. So where do we buy? And they've been buying small caps. You're seeing some value being bought. And you've been seeing this over the last couple of years. You see a rotation out of the mega cap high growth. People take profits and run and then go into the laggards. And inevitably they come back to where the growth is.
Well, better than anybody, as we're getting into October, when portfolios are being disclosed and reweighting happens. I'm very intrigued by that, simply because I think the companies that we invest in growth have better business models than the old companies. Their business models are one incremental dollar falls 94% to the bottom line. An incremental dollar, if you're selling shoes in Mongolia, it doesn't happen that way. And they deserve to be valued higher because of the incremental profit that they earn on a fixed cost basis. That there's no, there's no, if you add more volume, you add more cost. If you add more volume, your cost basis is, and actually your profit margin goes higher. Why don't the value people get that?
I know. It's this asset, light model. Or look at Meta and
Yeah.
what they're doing. They just
Oh.
keep reinventing themselves, and they have been the AI. You can see the impact it's having, not only in their revenue growth, but on their bottom line. They are not only increasing their users, which is extraordinary, but they're deepening the engagement, giving better targeting for advertising. Of course, that's where they make most of their money. And yet they have other things they're in the midst of monetizing, whether it's WhatsApp or other different things. So and even look at Alphabet,
Yeah,
all
I
the
was going to
things
say
they have coming
Alphabet's
up.
my new favorite stock.
Yeah, yeah, it's very interesting, particularly since we got rid of that regulatory overhang. And to
Yeah.
that judge's credit, who said, look, we don't know. Change is happening so fast. We can't predict it. And he really, I think, did the right thing, because by the time they would make them divest all this stuff, it's moved on and they've lost share in all the AI competition. That's been a big overhang in the stock too, but
Yeah.
they're no slouch in that area.
Yeah.
Well, Google, I mean, the interesting thing to me also is that I don't think people realize, I happen to, we use the corporate Gmail, okay? So now when you open up your corporate Gmail, you have Gemini already locked in. You have the text system locked in. You can actually chat with people on your system simply just on your keyboard. Once you get hooked into that, what are you going to do? Going to go back to Microsoft, Word, or go back to Microsoft email, Microsoft Mail? My God.
No, I know it's interesting because you look at the chat GPTs and how much traffic and it's
Oh,
doubling every few months. But then you look at Gemini, which is Alphabet's,
yeah.
formal AI, that their traffic, I just looked at some numbers a couple of days ago. Their traffic numbers are surpassing chat GPT. And people have sort of said, well, they're going to be also RANs, the search, but they're in it, and you've got YouTube and they've got the cloud, not to
Right.
mention Waymo, which is years away from profitability, but they have such a head start. So 10 million rides, perfect,
Yeah.
traffic,
Hey,
safety record.
Barbara,
Yes.
a quick question. So in a rising market that we've seen at the highs, and we continue to see higher highs, it seems every day or every other day, how are you going about your process of finding opportunities then for your clients?
No, it's a good question because you're staying with the ones that you still have long-term conviction, but of course you're trimming names. Like I've owned Broadcom and Nvidia for all my clients, right? And I've had to trim them back twice now, and there's due for another trim very soon.
Yeah.
And so that's one thing that's just part of basic risk management. Even though we have high confidence in both those names and all the things we just talked about, how long this cycle could be, you have to take profits. And so and trim it back to a manageable size. So it's really looking at, I mean, I look at some of the newer areas and all the things that are happening in AI, whether it's an app lovin or of course that I'm looking at here, and plus even in fintech, which I think is a bit harder
Yeah.
because in terms of where the winners are going to be, and that thing, and even crypto with stable coins. I'm doing a lot of work there because I've been studying the crypto space for a while, and I've not been a believer in Bitcoin, in terms of its basic tech.
I think you're pretty well on the record being.
I am. Of
Yeah.
course, a lot of people have made money that I haven't, but the stablecoin changes everything,
Yeah.
and it's really trying to understand, what that's going to mean for all the established players, if it's going to be a substitute for them or it's going to be something they adopt. But it's a big deal. It's a very big deal.
Well,
Okay.
I was interested, you have these networks, the Visa network, the MasterCard network, so on and so forth. I would love to have my Circle card instead of using my debit card, I just hit that into the system. But are they going to allow me to use my Circle card, my coin that's backed by the word I'm looking for here is the card that's backed by this system. Will MasterCard let me do that, or are they going to say, "Hey, no, you can't be using that stable coin on our network"?
Well, it's going to be interesting because I think if they don't, figure out a way, they're going to be obsolete, in some.
Yeah.
So, and I think these players know that. The big banks know that. And I think everybody's studying it and figuring out how are we going to make this work and how do we not, become a dinosaur? How do we not become, do you remember Quotrons early in the business? They were it. And yet,
Only you and I do. I don't think Todd's old enough. But
it's true. Who knows Quotrons? We used to share one on the trading floor.
right.
You have your own. So I think they're going to have to do that. But Todd, in answer, continuing the answer to on where you look, obviously the interest rate sensitives. If you believe we are at the start of an easing cycle, and
Okay.
that's where I've been watching Home Depot. Home Depot has had a nice move here. It's expensive. But that's one where, if we really are going to see lower rates, and it remains to be seen if it's going to affect the long end. So far, this last week or so has been very encouraging with long rates coming down.
Yeah.
that could really kick off the housing cycle, which everybody's been waiting for. I mean, we're at a 40-year low in existing, home sales. And so that could really jumpstart things. And a name like, Home Depot and even Lowe's has caught up, with Home Depot when you look at their stock performance this last
Yeah.
5 years. But, Home Depot is, is the leading shareholder at just 17%. They're gaining share. And if this interest rates continue to come down, it's going to really benefit them, and you'll see sales go up, margins go up, and so this would be a good play. But
Are
I
you,
like
are,
that.
are you basing Home Depot on the selling to the contractors, to the builders, et cetera, as opposed to the
Well,
retail?
that's a great new acquisition they made, or
Yeah.
about. Now it hasn't closed yet, I think, but that's going to be important because they've always gone after the pros. But this one really gives them an even broader customer base, better distribution. So that will be a positive. And their history is they are great at execution.
Yeah.
So it should not be a problem for them. But I'll tell you, I'm also looking at names like a United Healthcare, which I was buying before, thank goodness, before it was announced.
Yeah.
Buffett had, or a Boeing. These, you look at, these are great names that have fallen on hard times. Boeing has been a question for the last few years, when, but it looks
Yeah.
like this summer, every month they are really delivering more and more planes, the 737s, the 787s, and so they could be cash flow positive this fourth quarter, which of course, for the last 4 years, everybody's thinking that. But, so there's names like that are great names that should be, once they get back on track, could really have some good appreciation. And United Healthcare, is up about 40+% from its lows in August, but it's still, less than half where it was less than a year ago. And if they and it's got some very good news last week with their Medicare Advantage and
Yeah.
the whole, STAR system, which is obviously very important in terms of your profitability, the bonuses you get from, the feds, and also competition. People want to be with the higher quality ranked companies. So United Healthcare again has a great history and track record, and they've stumbled, but typically great companies and great managements figure out a way back. And so it can be a good risk reward to buy a stock like that here. And you don't know the timing, you don't know what's going to turn, but given their past history, it's probably a pretty good chance the risk reward's attractive here.
Well, every day, I believe 51,000 people become eligible for Medicare Advantage. And they have a marvelous product. They messed up, and they were some of the first ones to admit it. But I'm with you on like, what are the themes that you just feel are the most durable themes now outside of AI?
Well, I think, within AI, there's all different
Yeah.
subcategories, and of course you have the e-commerce play, which is Amazon. You also have the internet security and the cybersecurity, and those are names like CrowdStrike or Palo Alto. I think those are durable themes. I think even defense, and again, defense typically in the past was cyclical or dependent on,
Oh, yeah.
dependent on the whims of government, but that
Yeah.
seems to be, a continuing theme there. So, and also gold. I mean, gold I had always thought of as, well, in times of inflation and fear, everybody runs to gold. But I think we've seen a real sea change, just secular demand, and that's central banks. And I think, you have been seeing, there's two things that have been happening over the last 25 years. You've seen the weighting of the dollar in foreign portfolios, sovereign portfolios, go down. That continues to decrease. And of course, given current political currents, there's an incentive for people to reduce that even further over time.
That was so nicely said, Barbara. I mean, maybe politics should be your next move.
Yeah, try to be apolitical. You're just trying to see what is and how to respond to that. But, and the other thing, gold, when you looked what happened in 22 when Russian reserves were frozen, 300 billion, and other central banks went, oh boy, that could be us. And countries like India or China have less than 10% of the reserves in gold. So you've seen a lot of other countries buying gold, buying gold. It's tangible. It can't be, it's yours. You can't politicize that or take it away. So I think that's a trend that's going to continue. And so I've been adding it to all portfolios and making it a core holding for those reasons.
Yeah, we've been long not only gold, but I love the miners. So the GDXU is an ETF that's a 2x on the miners, and still today the miners' actual proven reserves times the price of gold, they are still 30% less undervalued just based on their reserves. assuming that, you can actually pull that gold out of the ground, which they can. It's not like copper. It's not like, other things that are hard to get out of the ground. But also, isn't gold sort of man, when things were getting really nervous, like what's going to happen tomorrow, and then the next day it changes, isn't gold like one of those things I can just,
A flight to safety. Yeah.
Yeah, no, Tobin, that's a really good point, because there has been so much policy uncertainty, and not just in our tariffs or, the tax package is done, but even geopolitically. And we're just reading how the alliances in the world are shifting around us, whether, you've got the Asian, China trying to have new alliances and gang up on us and form new things.
right.
Some of our allies, it's changing a lot. And, longer term, there's going to be, big implications. But right now, you can only watch and hope we don't do too much damage, that we will end up on top of that, because that's one thing everybody's talking about, American exceptionalism. Is that real? Is it not? Are we losing that? Well, we're not about to lose it, no matter, what we do, in my view, because that's really about, our innovation. It's about our labor flexibility. It's that we tend to have our GDP always tends to be higher than other developed countries. Our corporations, have higher earnings, higher profitability. And right now, I don't see the forces in place that are going to change that.
Let's not forget let's not forget our colleges. Let's not forget the immigrants who come to those colleges and stay in the United States, and look at Sergey Brin. I mean, go down the list of billionaires.
Yes, who were either immigrants themselves or the children of immigrants.
Yes.
That hunger and that drive, and to take advantage of the opportunities. The American dream, in my view, is still alive and well, and it may, feel that it's not for a certain segment of the country, but it's there. The opportunity is, if you want it, you can make it happen.
I like it.
Totally with you.
Totally with that. Very well said, Barbara. I love that. We're going to close out the show on that, guys. So many more topics we could talk about. Barbara, we do have to have you back on Buy, Hold, Sell. Definitely want to follow up, especially as we go through this progression with the Fed rate cuts for the remainder of the year. But we want to thank you for joining us.
Oh, thank you. It's a pleasure.
Whoever thought that gold would be the second best performing thing in our portfolio? We actually had to sell some of the miners today because we were so overweight, pardon the pun.
Amazing. Just money.
Yeah.
You got it. All right. Awesome. Thanks, you too. Really enjoyed it.
Absolutely. So on behalf of Barbara Doran and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. Coming up in 30 minutes on the Traders Code, we have Danielle Shea. She's going to be welcoming the Fibonacci Princess Traders show. Definitely want to hear what those two have to say, especially as we go into the Fed rate cut. So thanks again for joining us. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.